control of my life. If I tell you, baby, what you know about well, is living on the soul line, keeping things toes in the sun. I came down from Nashville, Tennessee. I got tired of city walls and streets, and I found that weird reality. Bitter by the shore, it's all you see, and that's why I'm very good. It's never the soul you keep it things going. Same, I say the best to the way you way. I already had no plan, but like it's all you keep it things going. Same, the same. Cause I'm very good. So if you want to make a great escape, pull that anchor up and pull me. Oh, come on down, son, your baby. Where the sun paint a smile across your face. That's why I'm very good. Just let it slow down. I said, well, that's such a good way. Yeah. It's like it's long. They keep it to the same. Side. Jump, you never get back. You know what you know, there's so long, so you won't even get back. That's why I'm every who will be. Just living on the soul. You keep it to the same. I'm very slow. I said, yes, yeah, no, it's all you keep it same, side. I'm very good. Right. Just like we want to. Yeah. First I get cold and hot, think I'm on fire. I'm not full of pain. I've got it must be love. There's nothing I can do. All that I want is you. Look what I'm going. It must be love. It must be love. It must be love. I'm going by like a dove. You must be the dream I've been dreaming of. Oh, must be love. Something is wrong, alright. Think of you, all my can't sleep till morning light. It must be love. Seeing you in my dreams, holding you close. Oh, what a scan it be. It must be love. It must be love. It must be love. I'm on the smack and go. It must be the dream I've been dreaming of. Oh, be that must be love.
Good morning, everybody. Happy Friday.
Be love.
We'll get started here in about 5 minutes. I'm still doing some final touches, putting some things together. Double checking everything.
Must be love. Yeah. I'm the same now. When I'm she's a bear, the beast. I know it's out.
All right, we get started here in about 2 minutes. Happy Friday, everybody.
It is a strong one, we're gonna have some fun.
Have some fun. All right, let's get started on this today. All right, I'm going to be monitoring the news very carefully. Now, first of all, I'd like to welcome everybody here today. Thanks for joining us. And again, happy Friday. Markets are somewhat on hold. Okay. We do have some good big things coming out with the meeting in Alaska with Trump and Putin. It seems like a lot of drama starting to heat up with Ukraine, Zelensky, and and all that other fun stuff going on. I'm just kind of going over here. We did have a Fed chairman, Goolsbee, was speaking on CNBC, and not very positive, not very negative, but you know, still trying to figure out all the numbers. One of the things that came out about 2 weeks ago, I think it was well, actually, it was, let's just take a quick look. It was on the first, Friday the 1st. So yeah, 2 weeks ago, and today is options expiration, just to keep abreast of that for the stocks. But the non-farm payroll that came out on the first caused the markets for some pretty big volatility, and almost every number has been called into question now as far as what's going on with the the Bureau of Labor and Statistics. Now, one of the things that if you go out and Google it is how does the BLS collect data? Okay. And we thought this information was a little more specific, but it collects data including surveys of both households and establishments as well as administrative data. Okay. But if we go into this all it's like, and we start understanding that, this is not really good data. Although the Fed chairman and the Fed tends to put things together. And, when we get an economic report, as we have different reports down here, all of these, like industrial production, for example, this is last month's data. Okay. Last month, not this month. So they've been sitting on their, well, we have the industrial production, which is a more specific number, but the economic report is referring to the prior month. Now that's going to be important as well around a 10 o'clock time frame where we expect reversals in the market. 85% of the time markets change direction around 10 o'clock. But business inventories is referring to last month, consumer sentiment referring to last month. But the information that the Bureau of Labor and Statistics keeps collecting is based on surveys. And those surveys take place prior to any meetings and release of information. Okay. And they're all based on surveys. So why are they restating numbers after the fact? Just it's really kind of confusing. And you can understand why uh, the current administration is putting a little pressure on the Fed because they see things behind the scenes and the Fed's going, well, we want to rely on this number. They've got to know that these numbers are not that great. Okay. I mean, the data is not great, not that the numbers are positive or negative. Okay. We're starting to see in the news headlines some kind of low tones. Goldman Research warns of unfriendly asymmetry, while the next big move may be to the downside. Okay. Dow set for 300-point rise, S&P eyes record ahead of retail sales. Okay, Trump Putin meeting. So as we start going through the headlines and we start to see some undertone of kind of bearish. Okay, one of America's most respected investors says Magnificent Seven isn't overvalued. Okay. So you're kind of getting that. Well, is it bullish or is it bearish? And if we're relying on the media to tell us what that is, then we're already in trouble here. So the NASDAQ and the Russell are starting off as an inside day, while the S&P and I kind of made a little typo there, while the S&P and the Dow are outside days. Okay, so let's go take a look at the indexes and we'll refer back to some of the other information. As we get started, though, one of the things that we look at in the pre-market is information like the US dollar. What's the dollar been doing in the overnight session? Okay, well, it's been trending down. We compare that dollar to the 10 and the 2-year yield prices. Okay, and at the same time, we want to make sure that we have a regular yield where the 2-year is lower than the 10-year. Okay, because when the 2-year is above the 10-year, and we're talking about the percentages there, is that's an inverted yield curve, and that brings other things to light. The other thing that I noticed was that our repo markets are also at the lowest point. Okay, so we need to keep an eye on the repos and the reverse repos. Okay. I mean, all of these things are kind of piling up at the moment. But one of our key indications of a more choppy opening session, a little less direction, is when we have the dollar inverse of what the yields are doing. Now, when the dollar and the yields are correlated, we get a good and better trading environment. Okay. The other things, couple of note is that the trend is on the low side, and we see that the VIX is also low. So the market's not the market's kind of set up for a little more on the bullish side of things as we watch those indicators, indications as well. Okay. Bitcoin made another all-time high yesterday and had a pretty sharp pullback. There's a lot of rumors and stuff going on. Keep in mind that a lot of things revolving around XRP, okay, and how that ledger is going to work, will come into play in on the 18th, where trillions of dollars will start trading on the XRP ledger, okay, and so there's a little drama ahead of that, where the media is kind of pumping things up, and it might be paid media because they're trying to push the prices down, okay, and cause people to sell. All right, as we look at the equity indexes, we can see that on a 60-minute time frame, you got you got some similar patterns here on the Dow and the Russell, and the Nasdaq looks pretty weak. I mean, it's been hitting that support. Yesterday, as we were watching all the indexes trade together, the S&P never made it down to demand zone. Okay, Nasdaq hit it first, and then we saw Russell and the Dow hit. Okay, but the market's still waiting for S&P. Okay, S&P did not come down far enough to find that demand. So there's the little discrepancy here. Okay, people are on edge. They're waiting to hear from what President Trump and Putin are talking about. And we also have that drama out of the UK as they all didn't get invited to the party. Okay, and how those things are unfolding. Seems pretty interesting. And the thing that Trump put out there, just as an odds enhancer, he says, we know within the first 2-3 minutes if it's going to be a good meeting or bad meeting. If it's a bad meeting, we'll stop immediately and we'll go on to something else. Okay. So we're waiting for words to come out, say, well, the meeting is taking longer than expected, or, those will be some of the clues that we're looking for that volatility. We can also see that the 5, 10, 30-year bonds and notes are sitting right on a support level. Okay. Now they could tip and go lower, trying to find some demand, or they could be using this as support to launch back to the upside. Okay. At any rate, the bonds and notes are holding at this point. The indexes, and you can see the Nasdaq has a closer picture to what the bonds are doing, okay, and the notes. So as we put a lot of these things together, I'm not giving you a lot of trade opportunities right now because we're kind of waiting for some information to come out. We do have several economic reports coming out today, and I also want to point out that with this administration and what's been going on with the as economic reports come out, is if we have multiple reports coming out, 8:30, 8:30, 8:30, okay, that the indexes have had a smaller reaction than we've seen in the prior administration. So these are subtle things that we watch for, because when we get all pumped up about taking a trade because retail sales or import-export prices and stuff like that, but if we have a grouping of these economic reports, okay, we've had a smaller reaction. Okay, so just keep that in mind. So at 9:15, in 3 minutes, we have a single economic report, which is industrial production. We may see a bigger reaction because it's a single report. Around 10 a.m., we had business inventories, consumer sentiment, multiple reports coming out. Okay, lesser reaction. Now, these are things to observe because for the prior administration, for 4 years, any reports come out, we saw big volatility in the market. Okay, and people didn't know whether the headlines were going to read, wow, it's import-export prices is the reason. Oh, no, it's retail prices, and so on. Now, retail sales are going up and will most likely show or have shown a positive result. Now, the underline behind that is how are they paying for all those sales? And most of the sales are being paid by credit cards. Okay. Now, on one side, it could be, hey, this is positive. On the other side is, why is everybody using credit cards when they have or potentially have cash? Okay. So there's some underlying things that are changing. All right. So we're about 2 minutes away from that report coming out. And I am currently in the S&P. I found an area where I was looking. I got a protective stop loss on here, anticipating a target move down to the potentially the gap fill. The NASDAQ also having an area and approaching that support. NASDAQ is an inside day, and prices coming back down to that gap area. The daily chart on the NASDAQ, okay, showing 3 doji candles right at the top. Okay. Well, 2 confirmed. Today is still being made. Okay. We're about 1 minute away from these economic reports. The small time frames are not giving us a really good entry point just yet. Okay. So we'll look for a price reaction down to demand or a price reaction back up to supply as far as initiating a trade right at the moment. The Dow also coming out of that area, again, using a fair value gap range to time some of the market entries. We're also using old resistance where the sellers were stepping in. Not much of a reaction there on the, let's see. Yeah, industrial production numbers just came out. Negative 0.1%. The forecast was 0. So, okay. Let's see how that starts to unfold. And as you can see, some of the things that I've been, some of the things that we've been talking about already is from our pre-market routine is that the markets are not very reactive right yet. They're waiting to see what happens in the meeting with President Trump and I guess President Putin. Okay. All right. So let's go back to the S&P for a moment. Another notable thing to be aware of is United Healthcare got some pretty good news that Buffett was looking into it. Okay. Now Buffett is, I think there was an article about Buffett buying into United Healthcare. Okay. When I pulled up United Healthcare and looked at the stock and kind of looking at the bearings of where things are at. Now we're trading up 11, almost 12% in the pre-market. Okay. 302.63. Now, as we're going to see a big gap up in price on 4 million shares traded. Wow, that's huge. Okay. I think everybody's taking the opportunity to get out. But as price is gapping up, we're gapping right into supply. Okay. Now, again, the only reason price goes up is a lack of sellers or a lack of buyers. And right now, price gapping up is a lack of sellers. People are holding on to it. Why? Because Buffett says he's going to be moving into that. Okay. Or there's some news out there. So as we watch United Healthcare gap up, run up a little bit more into supply, the possibility of price coming back down is pretty high. Okay. And if we go out to the larger time frame, out to a daily chart, we can see that United Healthcare over the last since the beginning of the year has had a not so great price move. So this is people not looking to invest yet, but just looking to maybe get out at a little better price. Okay. Right now, if we look at the way that the market is here on a daily chart, we have that resistance area. okay, is there is an accumulation of orders being built on a daily chart, okay? So just keeping a lot of that in mind, make sure you always check in your larger time frame for that picture, okay? Uh, let's see, crude oil. Crude oil and natural gas will probably have a little more volatility as they're waiting for information about that's coming out of Alaska for that meeting. Okay. Okay, yeah, there's an industrial production report for July, and it is posted on the Financial Juice website. Okay. We did get a nice move up from the beginning of the session with nat gas. Also, something that's notable if you're trading nat gas, crude oil, is about 2 hours before the pit open is where we start seeing a lot of the US traders come into the marketplace. Okay, so the 9 a.m. Eastern is the pit open, and we start seeing a lot of activity takes place on crude oil, natural gas, starting about 2 hours before the pit. Okay. Now, these are notable because often price will return back down to the origin of where traders were putting it. Wow, we got an early indication here of the market open order imbalance. Okay. So I'm going to bring this over here. This is a website that we use for news, economic reports, and things like that. This has come out early, and you need to do some study because the market open order imbalance is different than the market on close imbalance as far as the time where they can change their orders. Okay. Currently, the S&P, just at a glance, okay, and we see that UNP is the top buy, and we also see top sell imbalance. Now, what is an order imbalance? Well, the banks and institutions have large stacks of orders, and they either have a buy imbalance or a sell imbalance. Now, what does that mean? Well, if they have a buy imbalance, then price may go higher in order to find a sell. See, when you're looking at these reports, okay, and this information, a sell imbalance just implies that there's more sell orders than buy orders. Okay. Now, how do you get sellers or how do you get price to a level to process the sell? You gap it up. Okay. Price gapping up into supply, looking for them to process the sell orders. Okay. So we're still about 8 minutes before that. And the market open order imbalances, they can change right up to the open, okay, where the market on close orders 10 minutes before or 15 minutes before the market closes, they can't change anything, okay? So slightly different feel for that. Now, why am I teaching so much when we want to be trading? All right, that's a good question, okay? Why we are teaching is because the trade setups are still being manifested. Okay. We're taking information about the volume on the Dow 30 stocks. We're looking at how Apple and Nvidia are kind of mixed. And let's bring up the large market cap stocks. As we start looking at them, we're looking at this Amazon at $1.18, Meta's up $2.30, Google $1.30. It's kind of quiet, isn't it? It's not a big gap up or a big gap down. There's lack of drama. Okay. Now we are still seeing that NVIDIA, Broadcom, Alphabet, Meta are still right up near the all-time highs. Okay. Well, we're just starting to see a little shift. Okay. Apple's still got a ways to go. Tesla is probably the furthest away from the all-time highs. Okay. And Amazon has made a pretty good stretch after the gap down it had around the non-farm payrolls there. Okay. Yeah, that's when price gap down the August 1st area. Okay. Now, it is options expiration for stocks. Why are we talking about stocks? Well, when we're talking about stocks is because when we're watching, I'll bring this up here on NASDAQ has a better picture. The stocks move first, and then the exchange traded fund, and then the futures. That's why I like trading futures. Futures are a derivative and they follow, they don't lead. But the public thinks they lead, which is okay. They're just on the other side of the trade for us. But banks and institutions understand the dynamic of a derivative. Okay. So what makes up the NASDAQ 100 futures? Well, the Globex computer is the what controls the price on the futures. The Globex computer adjusting price up or down, okay, is doing that based off the individual stocks and the exchange traded fund. Okay. The NASDAQ is a market capitalization weighted index. And what that simply means is the larger market cap stocks influence the price more than the smaller market cap. So we monitored the Magnificent Eight, I guess you could call it. Okay. The top eight, and I only use eight because of the real estate that I have available here. Okay. So the top eight largest market cap weighted stocks, we want to monitor whether they're positive or negative, whether they're strong moves up or strong move down, and we get an idea of how the stocks are going to influence the exchange traded fund. Okay. And then how the exchange traded fund is going to influence futures. Okay. This is why we're always monitoring what the stocks are doing, whether they're making lower highs, lower lows, and I monitor them on a 5-minute chart. Okay. Ooh, getting some activity here. And all right, let's come over. Let's see what we got going on here. Markets 4 minutes before market open. We're seeing Russell as an inside day. We're looking for zone entries. So for Russell, I'm going to set this trade up ahead of time because I tend to miss them if I don't. And I'll be starting off with some smaller contract size. So we already said it's going to be a great Friday, good trading environment, going to give us some great opportunities. Okay. But we still have to enter the trades and manage the risk. So, all right, Russell, I'm going to start off with 5 micros and I'm going to place an order, a limit order to buy at 22.93.60. Okay. 22.93. Okay. So we have an order placed on the Russell. Should price drop into that demand area? Okay, this was the origin of the move up. There's possibility of some unfilled orders still left there. Okay. Now you may say, well, why don't we take it short? Okay, well, let's drop down to a smaller time frame and see if we have a place we could potentially look for the short entry going down to that demand zone. Okay. And we do have a nice little support area as a reference. This is where buyers have been pushing price up, and we're going to look for a price to test that support. Okay. We also have formed a leg base group of candles. Okay, so we've got our picture of a zone prior to price breaking out. Okay. And as we're looking at structure, price has made a lower high, assuming before the breakout trade. Now, there are opportunities to take breakout trade. Breakout trades are often a little more elevated risk. Okay. So don't get overly zealous about taking breakout trades. When prices retreat back to demand or supply, that's where we have more of the banks and institutional involvement. Now, I'm not looking for Russell just to take a nosedive and sell off. Okay. The daily chart yesterday came back into a fair value gap. We confirmed the golden cross. Russell is still pretty bullish in a lot of people's eyes. Okay. And therefore, being an inside day on the Russell, the better trades are going to be taken a little bit later in the session. Okay. Wow, a lot of whipsaw going on there. Okay, so we got Russell set up and ready to go. Let's jump out, look at the Dow. And they're off. Okay, so we got the Dow. Came back up and retested that fair value gap area. The Dow is an outside day. Okay, we have a lower probability that the gap will fill the same trading day. Okay. Demand zone is way down lower. Pretty far away at the moment. Going to have to be some pretty good drama if the markets are going to come down that level. Okay. NASDAQ. NASDAQ's doing well off of that fair value gap area and looking to break support. Wow, that's a beautiful one. I took that one earlier, so that's not doing the session. And we're getting a bounce off of that support. Wow, NASDAQ's only got 5 micros. Look at the thin that volume is. It's just plummeting. Qs are hitting that fair value gap area on a larger time frame. So I'm going to step out of this one and wait for another entry.
Order filled.
Notice I used the Qs as an odds enhancer. I had zones parked out there. S&P just coming back down. We have filled the gap. And I'm going to step out of this one as also.
Order filled.
Order filled.
Okay, so what we had a trade set up on the Russell. Okay, Russell's making its way down. I'm not going to jump in on the Russell as a breakout trade at the moment. Okay. Let's jump back and look at United Healthcare. Okay, yeah, United Healthcare, we want to watch. Prices came right up into supply or the sell territory. Hasn't quite triggered our zone. Oh, wait, maybe it did. Let's put those little blue dots on there. There is a leg base group of candles. And if we adjust the time frame up or down, let's try 6 minute. Yeah, pretty much the same. So when we're looking at the United Healthcare here, you can see the price gapped up into supply. Wow, nice job, Matt. Yeah, I know you like when price gaps up into supply. All right, let's come back out and look at the S&P. And we can see that they're at the Globex low and the gap fill area, there is that support, okay? A lot of trade activity took place yesterday. And we have a lot of filled orders there. Okay, I'm just looking for, way price is reacting here. I thought maybe some news had come out. Now, the main reason I took the trade off of the short trade was because of a level we had over here on the Qs. Okay. And we also seen the Dow moving lower. We also got a leg base. Oh, we do have some giveaways. Thank you. What do we have to give away as far as the prop accounts? Okay. And I do want to reach out and thank Elite Trader Funding for giving us some eval accounts, and we will be giving those away. I have 3 quiz questions. If you can tell me what account size, what type of eval it is, that would be great. Okay. All right, Russell's breaking the support. All right, that's the bounce I was anticipating. Yeah, team, if you can give me an update on the what type of accounts we have. I'm sorry, I didn't see it in the notes there. All right, nice bounce off for support. This is why we don't want to take the breakout trades. We got Apple, we've got Nvidia. There's also some other drama coming out about the tariffs will be starting off low and then getting bigger. I think that was one of the news headlines we thought that was being referenced as the chip war goes on there. Okay, thank you, Mr. B. And we have 3 50,000 end of day drawdown accounts from compliments of Elite Trader Funding. And I'll be doing the first quiz question here in just a moment. And then I'll do a second and a third one here. Okay, thank you for giving me that update. Okay. Now, for a lot of folks out there, you don't want to be using your monies in trading. You want to be working with a prop account if you're still in that learning phase. Okay. there can be a lot of mistakes made, and believe me, back in the day, we didn't have a simulator, which would have been beautiful to practice on a simulator before I lost a lot of family money, personal monies. Okay. I would have done much better if I had the ability to learn off of a proprietary trading account to get my discipline. Now, some people say, well, I don't want to trade one of those prop accounts because, you know, I, you just don't feel comfortable or there are too many rules around it. Okay. Well, rules instill that discipline. Why can't you stay within the parameters of a trade plan? You got to kind of ask yourself those type of questions. All right, looks like Russell's coming for us, so I'm going to sit here and wait for Russell. Remember, we have industrial production at 9:15. No, I'm sorry, that already came out. So we don't have anything until 10 o'clock reversal. Another thing that I'll point out here is if you're looking at the chart here on the Russell, the Russell is an inside day. And what that simply means is today's session, the Globex range, is inside the prior session's range. Okay. Some of the rules around that is that on an inside days, we look for just supply and demand type trades rather than trying to take breakout trades or momentum, because the breakout and momentum trades often get us really choppy. Okay. So waiting for the zone entry as price comes down. Now, once I am filled on the trade, we'll come in and place a protective stop loss as well. All right, while we're waiting, another thing that I want to point out is between 8 a.m. and 11 a.m. Eastern time is when we see most of the banks and institutional order flow. We also see that price has a little reaction around the quarter hours. Okay. Now, in recent observation of news being released over here, okay, is a lot of these news. This one is like Benzinga and CNBC and all these other news media companies. Notice when the information is released. CNBC 6:30, FX Street 6:30, Benzinga 6:30, okay, Market Watch 6:30. A lot of these big media companies release information or their reports or their articles on the quarter hour. It's like a deadline to have it done and posted on the quarter hour. Okay. So market is getting an influx of all of these media related news around the quarter hour. So a price reaction into a demand or into a supply around the quarter hour, okay, is often a good signal. Okay. Now we don't want price to come into the demand zone or supply zone before the quarter hour because price often then goes through it. Okay. So all right, let's do while we're waiting for this. All right, now listen carefully. I'm going to do one of our first giveaways for a 50,000 end of day account, compliments of Elite Trader funding. The question is, what is our primary objective with the market institution? What is our primary objective? A, to start a business. B, learn cooking skills. C, train your eyes to see the picture perfect setup and conquer the market. Or D, become a personal trainer. What is the primary objective of the market institution? A, to start a business. B, to learn cooking skills. C, train your eyes to see the picture of a perfect setup and conquer the market. Or D, become a personal trainer. Type your answer in the chat. First one, watch for an email or a DM from the team to get you set up with that 50,000. Oh, nice job. Got one. All right. All right, we'll do a couple more here in just a moment. Now we're about 1 minute away. And I'm keeping a close eye on the news and the media. So I don't want price to come into that zone earlier than the quarter hour, even 1 minute. Okay. Because then that's going to tell me that the risk is a little more elevated. Now, price arrives there 1 or 2 minutes after, that's still okay. And that's what we're looking for as price is coming down. We already have our order placed, $22.93 and 60 cents. Okay. We are using a technique to train your eyes using a leg base group of candles over here on the left-hand side. This is where we saw banks and institutions step in and hold the price. Again, training your eyes to look left for demand zones and supply zones, not trying to figure out if there's demand or supply on the current candle or 2 or 3 candles after. At the market institution, we look and teach a forward-looking technique. We're anticipating, based on the picture on the price chart, where there are stacks of unfilled orders. Okay. I mean, price was going straight down at this point. Okay. There had to be a lot of buy orders in this, not 1 or 2 contracts, not just a couple hundred shares down at this area, but big banks and institutions are the only one that control price. And very often they do not get all of their orders filled at the same price. Okay. So they don't chase price out of that. They wait for price to return to this level. Okay. So again, I like the question, okay, that we posed out there. At the market institution, we are looking to help train your eyes to look in the right places for potential trade setups. Okay. We're not a futures picking service or a stock picking service or anything like that. We want to educate you to help you identify where these levels are, forecast potential turning points, and then just wait for price to come to you. Okay. And I'm not jumping around. I want to look at all these other trades, but well, let's do it real quick. We got our order is placed. Now, as we look at a trade setup, okay, or trade identification, we have to keep in mind our trade management. Well, actually, for trade identification, trade application, and then trade management out of that. Okay. Let's take a quick back look over S&P has broke support. Price coming down. Let's look on the, yeah, we're still looking for S&P to come down a little bit further. Now, as far as the timing of what I just talked about, okay, we may be looking for S&P to arrive in 13 minutes. Okay. When price approaches a demand or supply zone, okay, we want it to arrive on the quarter of the hour or the top or bottom. Okay. So we still have a little bit of time looking for the potentially there's some demand there. Okay. 6,477 and we'll go with a half. Okay. So I'm going to place that order out there, 477 half. Start off with 5 micros. Now, I'm going to take a small profit off of this. Okay. I have a bracket order. I want to adjust my protective stop loss to the low of this level. Okay. At 64.75. Okay. And we're looking for a short-term bounce back up on this. Okay. Now, if this was dropping into a quality demand zone, okay, now I'm just only looking for a bounce out of this. I'm not looking for a trend change, because this is the beginning of potentially a downtrend. Okay. Let's see, high time frame. Yeah, our demand on the high time frame is much lower. Okay. So we just want to capture a bounce. Now, there's generally some unfilled orders at these areas. What remains to be determined is there enough to
Order
change
filled.
trend? Okay, just arrived, and we arrived early.
Order filled.
Okay, things are going strong down. Let's see, Russell. Let's get back to Russell. Don't miss us by a couple of ticks. Has a Russell arrived earlier than the quarter hour? Okay. So the possibility of a little more elevated risk is there. Okay. All right, Dow. Just a little, I probably should have left it down a little bit further. We would have grabbed it. But that's all right. And that was a very strong move to the downside, and most likely looking for continuation back down even lower. So let's give things a little time to open up. This level is out of the way. NASDAQ higher time frame demand is much lower, so we got to find a way to get into this. Oh, we just hit it. But it's not the right time. See, when price arrives there earlier than the quarter hour, you can get a bounce, but not necessarily a reversal. Okay. Now the picture up here is also something I want to look at. Notice this price movement back up, and now we're seeing this move down. Now, the steepness of the slope also can give us some clues of what type of price pattern we could look for. Now, if we arrived at the 224, 2618, or 314 Fibonacci extension, we could be anticipating a V-shaped reversal, which would be an aggressive move back up out of that zone. Okay. So we arrived at a 261.8, which would then lead us to believe that the reversal back up as a V-shape will be about a 78.6% retracement. Okay. Now, these are price patterns that we teach in our Mastering the Charts Part 2, as far as V-shaped reversals, head and shoulders, momentum reversals, and so on. Okay. Unbelievable. How many ticks did it miss us by? 1, 2, 3, 4, 5 ticks. Yeah, sometimes what I'm noticing with this technique of using a fair value gap is the price comes just slightly above that area. And just to mention the resource, while I was in the Elite Trader Funding Discord room, you got a lot of sophisticated traders in there that are really high level, and the team there is really supportive too. Pretty much put a question in there, it gets answered right away. I learned about that fair value gap, and I started studying it a lot more closely after some of their team members in the Elite Trader Funding Discord and their community room were talking about it. They also mentioned some other techniques like the ICT trading concepts, inner circle trading concept. Good stuff. But I've been studying it, not trading it. I'm learning to trust it, and that takes a little bit of time. And the study part is that I've noticed that price comes in just shy of that and starts to bounce. Somebody's using it. And as traders, we want to monitor closely what other traders are looking at. What's the most popular trading technique out there? I mean, a little while ago, it was all about the VWAP. Okay, and everybody was trading VWAP, and then everybody's trading fair value gaps, and everybody's trading supply and demand. Look, we want to not discount anybody's way of looking at the market, but we want to see how we could utilize that to profit from it. Yeah, I'm just not feeling really aggressive till I see the. Oh, okay. Well, that makes sense now. Putin's plane expected to arrive in Alaska at 3 p.m. Eastern time when Trump will greet him. All right, so that kind of takes off the day volatility, doesn't it? People probably shake off that because nobody knew the time that everybody was going to hook up. Maybe it was going to be midnight last night or early this morning. Okay, so a little pressure off of the markets at this moment, and looking for that meeting to take place a little later in the session, or later in the day. So how do we get into this? All right. Wow, that was a great entry on the NQ. Let's take a quick look at the stocks. Apple's holding, getting a little bounce on Broadcom. Yeah, it looks like the stocks are starting to bounce as kind of a little relief right here. All right, so I'm going to shift my focus over here to the NASDAQ. We have bounced out of that demand zone on a tick chart versus a time-based chart. And off of that bounce, that was a fair value gap. We have then just created another one. So I'm going to take this information off the chart. And look to find an entry to splice in this move where I can evaluate. Now, the fair value gap area is a 3-candle pattern. Once it's tested, it's done. Okay, so the 3-candle pattern here, price coming back to test it, 794.75. Once price touches that area, I'm going to hit a market order, and I will use the low as a protective stop loss. Oh, don't miss us. Don't miss crap. And the first opposing zone or first profit potential will be right back up at this range here where we have that 3 candle pattern as well. So in a perfect world, I'll look to capture a long off of that, a short-term trade up to 830 where we expect some sellers to come in. Okay. The other thing that I'll point out, if you're using the other resource, and again, somebody referred to me as traders helping traders, okay, in the Discord room, was the financial juice. Now, anything we have with the blue dot is you're getting that information about 24 to 28 minutes before all the Benzingas and Market Watch and stuff like that come out with mainstream media. Okay. So you have to understand the dissemination of information. This is the breaking information. Okay. But the media doesn't report on that till the quarter hour. All these reports and things like that, the media gets ahead of time, but it's under an embargo. Okay. And that embargo releases the news.
Order filled.
Ooh, we get in. We got our Russell trade. Oh, 10 o'clock. University of Michigan's consumer sentiment. All right, patience. Okay, 2284 will be our stop loss. Consumer sentiment was a little bit less than expected. All right, so if you're looking for a short-term profit target on the Russell trade, we are going to look at, this is the first range it has to get through. So that an initial bounce off of these levels, we're going to look for the opposing fair value gap, which is going to be right there about 2,300. Okay, so I'm going to use this. Okay. See, these areas, I mean, we're getting a bounce off of it. So what does that really mean? Well, it means that there were more buy orders and sell orders at that level. That's all. No magic in the lines and everything. The lines just kind of point us in a direction, okay, or what could possibly be there. Okay. If there is more buy orders than sell orders at this point, then price will start to move back up to find the opposing sellers, make a market. Okay. Always have your protective stop loss in place, a way to manage that trade and manage the risk. Okay. Now, IWM is the exchange traded fund for the Russell. And we see that the Russell may be pulling back just a little bit. Oh, sorry, the IWM has not started to reverse yet. Okay. It takes longer for the stocks to change direction. All right, let's see what happened to S&P. Little volatility. Did it hit our zone? No. Just getting a bounce. NASDAQ? Yeah, that was a great one. Beautiful entry on the NQ. I think just more of a relief rally. Okay. And the Dow. Now I use the leg base, I use uh, what we call leg base, basically keep it real simple. A leg candle is where the body is greater than 50% of range, while a base candle body is less than 50% of the range. Okay. We use a combination, a leg, a base, leg, base. Okay. In this example, we look for that combination of candles to isolate what we potentially can look for a zone. Okay. When you study historically, when you start looking back to the left-hand side of the chart and you start looking at trades you desire to participate in, okay, you will start to see if you look left, adjust the time frame just slightly, you will find that leg base group of candles where you desire to take a trade. Okay. Well, Russell is taking its time to turn, isn't it? Okay. Now, the important part of a forward-looking technique is to understand your risk on a trade ahead of time, and also have a potential place where you trust the entry. Okay. That takes a little time to verify to where you develop the trust to participate in the trade. Now, as a trader, I try to manage my risk by having a dollar amount part of my trading plan, and I stay within my dollar amount. All right, trend tick is still in the neutral area, advancing issues over declining issues. Okay. Yeah, we're still approximately 10 minutes away from the media coming out and telling us about Trump's plane arriving at 3 p.m. Eastern. Okay. All right, how'd the dollar handle that? Euro is now in supply. Well, we need Russell to bounce. Dow's in a demand zone. Higher time frame, 60-minute. No reaction off the 5, 10, 30-year bonds and notes. And not much going on with the metals market either. Let's jump out here. Silver. Support. Platinum. Copper is one I've been waiting for. I mean, you're going to have to go back out to a larger time frame. I'm waiting for that nice little price drop on copper back down to this range here before starting to recover from the drop. All right. Looks like we're back to that waiting mode. I did notice here on the Dow, there's a little area right here on, I just touched it. Okay. So this is still within my risk parameters here. And I'm going to look to participate in this one. Just giving it a moment or two. Let's look at the small time frame. Yeah, it's right there approaching it. a little more defined area. $45,051. I'm going to have to risk down to 44,988. So knowing your risk ahead of time, you can also see that there is a leg base group of candles. There's a fair value gap inside of that. Now, if you want to learn more about the leg base and that information, then visit our website, themarketinstitution.com. Dip in there a little bit more, people. All right, 45,051. I don't want to chase this. Actually, I do want to chase it, but I know I'd have to sit through a little drama before it starts going. Now, what you're going to find at the market institution is, price is going to be dropping right down. Now, most of us have been taught never to catch that falling knife. Okay. Don't get in front of that. And, a lot of people wait for additional confirmation because they don't or haven't spent enough time studying the price charts. Okay. Now I'm going to place that order. The order's placed 45,051. My stop loss will be 44,988. Okay. That's the risk on the trade. Okay. And then we have potential reward, which I'll point out a little bit later. Now we're still about 5 minutes away from the next quarter hour, and I'm willing to wait as price comes and wait for my entry. I have missed a few of them. Wow, I touched it right there at 59 on the little higher time frame. Hey, Russell, our trade is still valid. It hasn't violated our stop. Make sure any trade that you take or participate in, that the risk is within your trade plan. Okay. All right, so let's do the next proprietary account giveaway. You get $50,000 end of day drawdown account, compliments of Elite Trader funding. Okay. Here's the question. The first one that responds in the chat. You can be in the chat via our Zoom or in the YouTube channel there. Okay. Which of the following is not one of the courses offered? A, Mastering the Charts Recap and Review. This is referring to our website here, so I encourage you to check that out. Which of the following is not one of our courses offered? A, Mastering the Charts Recap and Review. B, the combo, Mastering the Charts 1 and 2 for education. C, Advanced Robotic Training. D, the Foundation Application Coaching Subscription Bundles. Okay. So again, which of the following is not one of the courses offered? A, Mastering the Charts Recap and Review. B, our combo, Mastering the Charts 1 and 2. C, Advanced Robotic Trading. And D, Foundation to Application Coaching Subscription Bundles. All right, first one to respond, we'll get that end of day evaluation account from. Again, I just want to reach out and give a shout out to Elite Trader Funding for thanking them for providing those for us. All right, here we go. Oh, no way. One tick?
Order filled.
All right. Hit that stop in place 44,988. Okay, we got $157 risk on 5 micro contracts. Okay. And that is putting our stop loss right at the distal line of our fair value gap. Now, there is a large percentage of the time we do take the fair value gap and we get a 1-to-1 move out of there. Okay. Large percentage of the time. Okay. You determine what is going to be the best route for you. Okay. You want short-term scalping type trades? Well, you can take those off of that as well. Make sure that you read all the rules. If you're using a proprietary account, about how long you need to be in a trade. Okay. So I think most of them are like 10 seconds or longer. All right, everybody together. Rally, rally. Now, what we are seeing here is this picture over on the left-hand side of the chart signaled us for the area of a potential trade over on the right-hand side of the chart. Information collected on the left-hand side, providing an idea of where price may change direction, how we can manage our risk, and also see the dollar amount risk that we would be taking before even placing the trade. Okay. When price starts to bounce here and not just go straight through it, okay, this picture represents there are some orders still waiting there. What remains to be seen is if there's enough orders to change the trend back up. Okay. All right, let's go look around here. Ooh, that's what almost got us. Took out that whole range. Let's see if there's any more buyers down at this area. We're still not getting a big bounce on the IWM. And we need a little more strength from the stocks to help us get a stronger move back up. Dow's going deep into the zone as well. Now, at this point, we're looking for some buyers. Now, if the buyers are not strong enough to turn price back up, or your price is going deeper in the zone than you feel comfortable with, you could step aside and then look to take the trade as it's leaving the zone. Okay. That's coming back into the buy territory.
Order filled.
In training the eyes here, we look for that resistance area where sellers were pushing price down, and we look for where the buyers were pushing price up. Okay. We're now back into that buy territory. and we're seeing that the leg base is much lower. Okay, and this is a higher time frame. And also a note, okay, price is dropping not because everybody's selling. Okay, 'cause you can see right over here that there's not a lot of volume selling. Okay, they're simply not buying. So where will they be buying? Well, a little larger time frame, we're going to be looking for the area down here, and we have our stop loss at 157 bucks on the small time frame where we're looking for that bounce. Crude oil's quiet. Natural gas is still stretching to the upside. Wow, look at that. The exchange traded funds just went all different directions this morning. Okay, I'm gonna come back here on the Russell, a little higher time frame. I'll be looking for that area. 2279, 2274. 5-year, 10-year, 30-year bonds and notes. Also still holding that support, but it looks like it's getting pretty heavy on that. So saying that, let's look at the market conditions as we started off our session, talking about when the dollar is going down and going inverse of the yield prices, that the elevated risk, well, the market conditions are not the greatest. Okay. Market prices are dropping, or so the indexes are dropping, and the trend is low. That's not the right conditions. If the markets are dropping and the trend is high, then we have indications that the banks and institutions are stepping in to help price, okay, or to be buying. We're seeing a lot of mixed signals right now in the market, and I'm speculating that it's based on waiting for the news to come out. Okay. Let's see, Russell. I'm gonna get that trade set up over here. RTY. Yeah, I do take some trades on these on my prop accounts. I'm gonna set this up as a limit order. With the RTY, 79.80. All right, that one's ready. Dow.
Filled.
Dow's still continuing to drop. Now I did get stopped out on a couple of trades today. We still but as you can see, the conditions. Well, I'm not making an excuse. I got stopped out. I followed my trade plan and I took a small loss within my trade plan parameters. Real trading. All right, let's see what we got going here on the ES. SPY keeps pushing lower. Nasdaq pushing higher. Yeah, these markets are really kind of mixed here. Meta's doing pretty good, but everybody else is really quiet and slightly bearish. Okay, let's put off that last question here. Again, this is for a $50,000 Elite Trader Funding prop account, end of day drawdown. And this one's going to be pertaining to what we do here at themarketinstitution.com. What happens in their weekly schedule on Tuesdays from 9 to 10:30 Eastern? Live trading, community room, strategic webinar, or recap and review. Again, this is Tuesdays between 9 a.m. Eastern and 10:30 Eastern. What are we doing? A, live trading room, B, community room, or C, strategy webinar, or D, recap and review. Again, answer that question and get a free or get a end of day drawdown, $50,000 account. Compliments of Elite Trader Funding. Now, it looks like I'm going to be waiting a little bit longer for some trade opportunities here. Looks like we all are going to be waiting for some. Boy, small time frames are really choppy. Saw some great entries, and a lot of times we do see great entries. We do see some very successful forecasting turning points. Unfortunately, there's another part of that. You can always look and say, yeah, look at that great entry. But you have to remember the application part of it. Okay. Yeah, most of us are really good at calling the market. Okay. And turning points. Well, did you take the trade? Okay. The application part of it. Did you take the trade and manage your risk and so on? Okay. So I don't want to make light of this. I want you to understand that once you have your trade identification, okay, once you have your trade identification, you still have to have a way to apply the trade. How are you going to enter it? Okay, are you going to wait till market price gets there and hit the market order? Or are you going to place the order out there ahead of time, waiting for price to come to you? Okay, you got to have that plan. You got to have the things in place for you to apply a trade. And of course, on the application, right after the application of the trade, you have to have your money management part of it, the trade management part of it. So always remember, you got about three parts of your trade plan. First, you got to identify the pattern you're going to get or the trigger points. Then you have to apply the trade. And then after that, you have to manage that trade. Okay. So I know a lot of folks out there teaching and putting things out there. They think, oh yeah, look at this. This is a nice place to enter. Look at this successful trade and so on. And but there was no way to apply the trade. Okay. All right, let's take a quick look and then we'll wrap up our session here for today. Russell's still in that spot. I think I might have missed the entry. Something else to notice is that the S&P over here is starting to build an accumulation of buy orders. Okay. The observation how they accumulate is usually under a resistance, you'll have a buy territory, accumulation of buyers. Above a support, you're going to have an accumulation of sell orders. Okay, so let's just use this little example right here. We have a nice support area, sellers up above, buyers below. This is an accumulation of sell orders. At the origin, price breaks that support is when the sell orders, there were no more, okay, or sorry, no more buy orders. Sell orders took over. When price returns there, we're expecting them to be some unfilled sell orders up at this point, okay? So we're waiting for price to break above resistance, therefore identifying a buy territory. Okay, so how we visualize that, just as we're visualizing the S&P here for the sellers, is we're anticipating that as price comes up, we'll find the sellers up in here. Okay. In order to make this or complete this buy territory, price must break above resistance. Okay. And then we have the area below, which would be our buy territory. And in this example, a picture perfect world would be price comes back down. And then since this area has already been used, we would then see price move back up. So after you confirm many hundreds of charts, and I know a lot of you spend much time on charts and looking at price patterns, you're already conditioning yourself. But move that price chart away from the hard right edge. One of the things you'll notice in all my charts is I have a lot of white space over here. Okay. Many charting platforms have you write like this. Okay. And I know it's subtle, but if you don't have if you're looking at using a forward looking technique, okay, you need to be moving price away from the hard right edge and then start watching how, and maybe even put your own projections on there and testing out your method and your approach. Okay. If price breaks above this area, it's going to find the sellers. Okay. This is the picture where I look for sellers. Price coming back down to demand where we have leftover unfilled orders. This is a picture where I'm looking for buyers. Okay. Now there's nothing wrong with drawing on your chart and putting this picture out there because it slowly starts to train your eyes and helps you manage expectations and above all, manage risk on a trade. See, if I identify the Lake Base group of candles as my entry and stop loss, I've exposed what the risk is on a trade. Now I could potentially know the risk involved. I can size my position according to my trade plan. Okay. Now, if price continues to go down, it doesn't mean we did anything wrong. It just means there were not enough buy orders being accumulated to send the price up. Okay. So don't think you're wrong or right about when you draw these out and things don't go your direction. Every trade that we've talked about this morning, we've had a place to enter, manage risk based on our trade plan. And generally my trade plan allows me about $200 risk on any trade. Okay. So if I jump into a trade and I automatically see that I have more than a couple $100 outside my trade plan, then I need to drop a couple of contracts off that and get within the trade plan. Okay. So I do want to thank everybody for coming in today and watching our live stream. It was not as exciting as I would have liked to have been, Okay, but we still have the whole day ahead of us. Thank you, Elite Trader Funding, for providing us with the end of day drawdown accounts. And I think we still have one out there, so we will get those to the right people. All right, everybody have a wonderful Friday. Let the market settle up. Watch for your trade entry, manage your risk, okay? Have a good rest of the day, and we will see you next week. Happy Friday, everybody. Bye now.